Welcome back to the Real Talk podcast with Gary Kelly. That's what it says over there. I'm joined by the ever debonair Brad Avergon from Fairway, continuing to be independent mortgage. There's going to be a day where they're going to sell out and it's going to be Fairway GMAC mortgage or whatever. And that'll be awkward, especially if it's GMAC. Brad, one of the things that happens is people will put their data into your app, upload it to the computer in the sky, and then the next thing will happen is they'll get a call from you saying, well, the underwriter has a problem with this, or the underwriter has a question on that. Who the F is the underwriter? And why do they get to sit behind a curtain?
I want to talk to that underwriter, and I want to talk to him now. So the underwriter, and I'm kidding, by the way, about underwriters. Underwriters are very, very important people who do a very tough job.
Here's a spin.
Don't be laughing. This is not the comedy portion of the show.
Here's a spin coming out. Let's not piss off the underwriter.
Listen, I've been fortunate enough to work with underwriters who have a job to do. They have a job that they have a set of guidelines that they have to adhere to that make a loan what's called a saleable loan. They make a loan, or a QM, a qualified mortgage loan.
Whoa. You're going to sell my loan?
Well, it not necessarily. We may transfer the servicing to another entity, but even beyond that, the powers that be, Fannie Mae and Freddie Mac, who you might heard of, set rules, and the government sets rules that we must do a qualified mortgage. What does that mean? It means that we can't give a mortgage in theory, to somebody who's not going to be able to afford it and set them up for disaster. That means we have to verify their income. We have to verify their assets. We have to, at least on its face, look at this thing in detail and look at their credit and say that this is going to be successful for them. This is going to work. And if we don't, we may be in a situation where we have to buy that mortgage back, and the client, either ends up with a foreclosure or whatever, or they end up with a property. We don't want that. They don't want that. Okay. Nobody wants that. So the underwriter's job is to adhere to those guidelines, but they need to do it in a neutral way. They can't have borrowers calling them on the phone, screaming and yelling, yeah, I got this, I got that. Why aren't you giving me my loan? That's where I come in. They get to scream and yell at me. My job is to understand the guidelines that the underwriters have to adhere to. Okay. And be able to set a borrower on a path to be able to meet those guidelines. Sometimes they can, sometimes they can't. Sometimes it has nothing to do with the borrower. Sometimes it has to do with the property, especially in the case of like condominiums. The borrower can be A++++, but the condominium does not meet the requirements of having the adequate insurance, having adequate reserves, or maybe the value isn't there. Whatever the case may be, the underwriter is to remain neutral. The loan officer kind of acts as that personal interface and explains to the client, you know what, this is a person doing their job. This is what they're required to look at. And this is how we want to present you to the underwriter.
Do you ever feel like the underwriter is asking more questions than they should, or they just don't understand, and for whatever reason, you can't get it through? I mean, they're humans. You can't get it through their thick heads. Do you ever feel like that happens? Or are these established people that have seen it enough times that they kind of go with the flow?
I know it with the majority of the underwriters that I've worked with in my career, most of them are human beings, and they understand.
Whoa! They're human beings? Woo!
They're human beings, and they understand there's a person trying to buy a home behind this, and that if they decline that loan, there's going to be sadness. There's going to be ramifications. They know that. They try to make loans. They want those loans to be able to be approved, but they have a tough job to do. Just like
how do they get paid?
Underwriters?
Yeah.
They don't get paid on commission. That's for sure. Too bad. I'm going to suggest that. No, kidding. All kidding aside, they get paid, either salary or hourly to do a job to review certain amount of loans, make sure they meet guidelines, and sign off on those conditions if there's conditions on the loan, and then that loan is a good qualified mortgage, and one that is good for either the portfolio or saleable loan.
So I've been in this situation personally where it's the day of closing and the underwriter is still tossing out things to be resolved.
That, in my opinion, is poor. That's the poor processing and loan officer work, because that shouldn't happen. It shouldn't wait that long. In
I
my
agree with
mind,
that.
huh?
I agree with that.
Honestly, I mean, I set for my team and I, we have the mortgage contingency date, the date by which a client has to have their financing in place by. If by that date there's a significant question on this file, whether this person's going to be approved or not, then we either get that date extended, or we have a serious conversation saying you may want to exercise your rights under the mortgage financing contingency to protect your deposit, because it's one thing to say, okay, yeah, we need a pay stub, or we need to get, for example, a home insurance binder sent over or something, or a completion cert, which is showing a property's been completed on a new construction. That's kind of a cut and dry condition. But if there's an area that's in the gray, like the underwriter is questioning the borrower's income, or they're questioning the assets on the file, that needs to be addressed before that date goes by. And if that's not, and it's getting to the 11th hour and the underwriter's raising issues, something went wrong with the plan, or it wasn't handled appropriately on the origination side.
So in your mind, underwriters are a good thing. In my view, they're a necessary evil. With evil is highlighted.
Yeah, I can't agree with the necessary evil. I think they are a good thing. I think they're a second set of eyes to make sure that we're doing the right thing for a client. It wasn't that long ago, Gary, that we had the mortgage meltdown, right? Where everybody, listen, everybody can own a home, and here, zero money down, and no income, and no asset verification. And everybody was dancing in the streets, because now the fact that I had no income, no assets to show, and terrible credit, I could now own a home. Well, that turned very sour very, very quickly when all those homes started to go into foreclosure and different things like that. And then people weren't so happy. So the important thing is we want to make good decisions. We want to put people on plans for success. And I think the underwriters feel the same way.
All right. Well, I appreciate your spending time and talking about the dreaded underwriter. And I do realize that they're a necessary evil. I'm just teasing you now. Brad, if someone wants to reach you to talk about underwriters, how would they do that?
Best way to reach me, Gary, is via my cell phone, which is 978-375-5531, or via my email, which is brad@bradavergon.com.
Great. Brad, thank you very much for participating today, and enjoy the rest of your day.
You as well, Gary.